What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to talk about some stocks that we're watching for the weeks ahead. These stocks include names like Tesla, Apple, NVDA, Gold, and Netflix. We're going to give you all the resistance and support points that we're watching for these stocks, and we're going to talk about the strategies that we plan to take on them, the price targets, and the stop losses that we plan to use. So first, let's go ahead and get started by talking about SPY, which is going to give us a general overview of where the overall market is trading. So we can see that SPY in recent weeks has fallen below its 10 and 20-day moving averages, and ever since it fell below those levels, it has been selling off. Every time we came up to test one of these levels, we only moved lower, and now we are right back at the 10-day moving average as of last Friday, and we are potentially going to move lower or higher depending on a very key decision that's coming from the Federal Reserve. On Wednesday, we expect the Federal Reserve to give us an update on whether they're going to raise rates by 25 or 50 basis points, or if they're going to leave them unchanged to avoid more banking casualties. So as I'm sure you've heard by now in the last couple days, or in the last couple weeks rather, two banks have failed in the United States and another bank in Europe is on the brink of failure, but it's gotten a recent lifeline from one of its partners. And so with all the fears going around the banking system, many people have hit the panic button, and we can see that the market have started selling off significantly and with very significant volume. In fact, this is the most volume we've seen since January 2022. And so now let's talk about some key levels that we're watching on SPY for the week ahead. First, let's talk about the overall range. The overall range in recent weeks has been a high of 396.70 and a low of 383.30. We're going to talk about this on the hourly candles on both Thinkorswim and TradingView, just so you have a clear view of what we're talking about. So in the recent weeks, we saw the market rise to a high of 396.70, which makes that our very significant resistance, and it came down to a low of 383.30, which makes that our very key support. And so if we break above 396.70, then we are expected to move to a high of 401. If we break below 383.30, then we are expected to move to a low of 380.49. If we move below this level, then we are likely going to see panic selling. And so what could possibly take us higher or take us lower in the coming week? It's going to be the Federal Reserve's decision. If they raise rates by 50 or 25 basis points, it can cause panic selling because higher rates could put more banks and more businesses at risk of bankruptcies. And so keep in mind, historically speaking, anytime the Federal Reserve has raised rates, it has suffered or created many casualties, especially in the banking system, because those banks and the consumers and the businesses who don't have enough cash at hand to withstand the hardening economy and the more expensive interest rates, those people who don't have enough cash to cover that end up having to commit bankruptcy, and we see these companies going belly up. And so now let's talk about the range that is within this range that you need to focus on. And so between Monday to Wednesday, we are likely not going to see a very large upside or downside move. But on Wednesday, when the Federal Reserve makes their decision and Powell speaks right after they make that decision, we are likely going to see that sharp move either above or below this range. But until then, let's talk about the levels within that range. The first level to pay attention to is going to be 392.25. If SPY can break above 392.25, then we can expect it to move to 394.60. So if you're going to long the market or play calls on the market above 392.25, you're going to wait for that breakout, and then you're going to place a stop loss just below that level in the case that the market fails back down. You need the market to stay within this green range for it to hold that bullish trend, and for you to take profits, it's going to be right around 394.60. So that's going to be the first level we'd like to take profits at. If we see that the market is still strong and there's a chance to move higher, then our second price target is going to be 396.70. So usually we take profits on about half our setup at the first resistance, and then the second half right around the second resistance. Now if the market fails and it moves below 388.50, 388.50 being a very significant support because we had a double bottom bounce on Friday, which means it was 2 times that it was tested and it bounced both times. And so if it moves below that level, those people that were willing to hold it up above 388.50 have given up their positions, and it's likely going to move to a low of 386.30 and even 383.30. And so that is going to be the general range for SPY to start off the week, but keep in mind after Wednesday we are likely going to be above the high or below the low of this range. So now let's move on and talk about our watch list. But first, before we get into the watch list, let's talk about VIX, or the Market Volatility Index. The reason we're talking about this is because we know many of our followers and our premium members are options traders. And when it comes to options, implied volatility can make or break your trade. And the reason why is because implied volatility is measured as a percentage, and during times of high implied volatility, which is when VIX, or the volatility index, is moving higher, many option contracts have an inflated number of IV, and that IV contributes to the price of the contract. And so anytime you're buying a contract during a high VIX cycle, you are likely paying a larger premium for it because implied volatility is trading at a high percentage. So when you are trading or you are choosing your contracts in the next couple weeks, pay attention to where implied volatility is. If your IV here is trading above 100%, then you are overpaying for that contract. When you are finding implied volatility of around 25 to 40%, that's a more attractive contract because it has a lower implied volatility, and it means that the option contract's pricing is not too inflated. So now let's get into the watch list. We're going to start by talking about Netflix, and we're going to talk about it on the daily candles. We can see that Netflix has been coming down for the last few weeks ever since the market fell below the 10 and the 20-day moving averages. So we see a very similar pattern between SPY and Netflix, where we can see that right around the middle of February, they both fell below the 10 and 20-day moving average, and they have been moving down since, which is the exact reason we always like to look at SPY, because it gives us a general overview of what large cap companies are doing. And so Netflix for the last few weeks has been coming down, and it has moved up to test the 10-day moving average multiple times, and every time it has tested it, it has moved lower. Now this time around, it's testing the 20-day moving average and the 100-day moving average, and it got rejected at those points and it moved lower. And so for Netflix for the following week, we are looking at these resistance and support points to play the stock. We're looking for a break above 316.55 for Netflix to potentially give us a bullish move to 323 to 323.30. If Netflix shows strength, then we will continue holding our move and take profits at the next price target of around 330 to 332. Keep in mind, we always like to take a little bit of profits at our first price target, just so we secure some gains in the case that markets moved back down. Now, if Netflix moves below 297.50, then we are likely going to short the stock or play puts on the stock. Our first price target is going to be right around 291. If Netflix fails at 291 and continues to show weakness, then we are likely going to hold the remainder of our position to right around 285.33. Keep in mind that resistance and support points are only approximate points of support and resistance, which means that if you see weakness or you see strength around a time in which you are approaching a resistance, it doesn't hurt to adjust your strategy and take profits or cut losses ahead of it. The next stock on our watch list is going to be gold, or GLD. We're watching this ETF because it has been incredibly strong all of 2020-23. Even when it pulled back to a low of 168, we can see that buyers were very quick to jump back in it as soon as the Silicon Valley Bank collapsed. So gold has always been a safe haven investment for many people, and we can see that that is indeed the case in 2023. Gold has been rallying all year, and recently it saw more volume than it has seen in the last 52 weeks, which goes to show that many people are running towards precious metals to put their investments in, because for as long as history has existed, precious metals have had value in our world. So here's how we plan to trade gold and some key levels that we're watching for the weeks ahead. First of all, we have to address that gold has been rallying, and it could be rallying a little too high for its own good, so a pullback or a relief consolidation is due. We are expecting a pullback towards 180, so we would like to gain entry around 180. Our stop loss would be just below that level in the case that gold fails to hold it. If the ETF can hold 180, then we are going to long or play calls towards a first price target of 186.10. Above that level, our next price target is going to be right around 191.60, so we take profits as soon as gold peaks above 190. Now, if you are bearish on gold for whatever reason and you think gold will fall, then you are looking for a break below 177.50 for sellers to really step up, and your first bottom side price target is going to be right around 174. The next stock on our watch list is going to be NVDA. NVDA has been a sweetheart for many people lately because they are getting a very strong push from artificial intelligence and ChatGPT. However, NVIDIA is becoming way too valuable, and the company is in need of a strong correction back down. Now, markets can stay irrational much longer than you can stay solvent, which is a famous quote in the market. So if you are expecting NVIDIA to correct itself anytime soon and it's just not coming down, it just means that NVIDIA is just acting irrational, and eventually all the greedy people that are buying it are going to want to sell their positions, and they will bring that stock back down. So here are some levels that we're watching on NVIDIA for the couple weeks ahead, and here's how we plan to trade it. As of now, NVIDIA is riding too high for its own good, so we do not plan to long it above 264, but if you do want to play a long or you want to play calls, a move above 264 has a price target of around 270 to 272. We'd be very careful holding calls too long above the 264 level because NVIDIA is showing a little bit of relative strength weakness. We can see that there's a negative divergence, which simply means that the relative strength here on the higher move is trading below this level here, which was a lower move. So this relative strength or negative divergence could signal that NVIDIA is ready to move back down. For us to play puts, we're looking for a break on NVIDIA below 238.70. Below 238.70, we would take on puts or short the stock down to a price target of around 223 to 225. If the stock fails below 223, then our next price targeted to the downside is going to be right around 215. The next stock on our watch list is going to be Apple. Apple is one of the few companies like NVIDIA that's trading above all of its healthy moving averages. However, just like NVIDIA, Apple is suffering from weak relative strength. So we can see that there's also a negative divergence on Apple, which could signal that the stock is ready to move back down. So if you are looking to trade Apple, here are some levels that we're watching on our end. The first resistance that we're focused on is going to be 157.50. If Apple can move above that level, it would have moved above a very significant level because it has been rejected at 157.50 here, here, and twice here. So just below 157.50, it's gotten rejected. So if buyers can finally gather up the strength to move it above that level, then our price target is going to be anywhere between 162 to 164. Now, if Apple fails and it moves lower and then it breaks below 150, then we are looking for a price target of 143.50 to 144 on the downside. Below 153.50, you can move to a low of 140.40. There's no saying which direction Apple is going to go next. It is going to be heavily dependent on the Federal Reserve's decision and how the market reacts to that. So make sure you pay attention on Wednesday. So now let's move on to our final stock, which is going to be Tesla. We're going to first talk about Tesla on daily candles, where we can see that Tesla has been flirting between its 50-day and its 10-day moving average for the last week or so. Tesla has not really given buyers a very high move up, and it has not given sellers a very strong move down. So if you are playing calls or puts, or if you have been playing calls or puts in the last few weeks, you're probably very frustrated with Tesla. But there's a good chance that Tesla will give us that upside or downside move this week, given the fact that we are getting the Federal Reserve's interest rate decision. So let's talk about some levels that we're watching for Tesla. Tesla's first resistance to focus on is going to be 186.25. If Tesla can move above that level, then our first price target is going to be right around 193 to 194. If Tesla can break above that level, then we are going to take a price target of $200. So anytime the stock moves above a resistance, then we are going to place a stop loss just below that resistance. So if we take on calls for Tesla above 186.25, then our stop loss is going to be below that level. And then when Tesla breaks above 193.40, then our stop loss will move from this level to just below this level. Now, if Tesla fails and it moves below 162.70, then we are going to be playing puts down to a low of 162.70 to 164. If Tesla fails below 162.70, then our next price target is going to be right around 153 to 155. So that's all we have for you guys. Thank you so much for watching. Please don't forget to subscribe and like, and best of luck trading.